difficult day. Had to hold on to him, but I managed to get in right at the low as well. So I'll just the stream.
You're fading in and out. I don't know if it's you or me.
How's that? Is that any better?
Yeah, that's good.
Okay, it might have just me.
No, you're fading out again. It's the signal. It's not the proximity to the microphone or anything.
Oh, actually, the live on YouTube doesn't seem to be happening. Why is that not going on? There we go. Right, we are in. Sorry, guys, a bit late this morning, and that the FTSE 100 is a good this morning. Now, I have got a long down here. I'm long here. I've got a low here, but I'm happy to hold them because I do see some fluctuations. But I think the longer term trending is looking good. Now, what we kind of want is this hourly bar to give you guys an opportunity to get in. Now, this is going to be a sweet spot, possibly the daily pivot, but the daily pivot's until later in the day. So I would suggest that's probably a decent have some stops if you can get in, but the idea is definitely to get in. Lovely V-shaped recovery yesterday. As I say, I managed to get in right on the low. I did. I've got.
It's a pretty fancy pattern there, mate. Eh?
Oh yeah, it's great. So if this can come now, as I say, I just think that everybody should just get in long and see if you can get down. You want the right price, obviously, but it's one of those that I think blink and you'll miss it. So I've already got my positions, but if I was going to try and go long, I would probably still wait for this trend line just to get tested somewhat. Just because the price will be a little bit better down there, but it may not happen and it might just start to rocket to the upside. So the only way you can do that is if you're willing to have a really broad stop, which is probably no point in doing that. But if this comes down, as soon as it touches that level, so you're looking for around about a 10 pip drop, then I would buy it. You know, I that would be my advice to everybody, but let it come down, let it touch the trend line. Now your price right now will be, let me do it on your charts, because I'm doing the futures. FTSE. Now there's an argument, obviously, that this isn't a trend to the downside with the 4 hourly, and I get that, but I'm not buying it. I'm not buying the downside. Just I'm not buying into it. I think that there's plenty of upside left in this market. I think a bit of a retracement is fine, but as you say, that the recovery yesterday, mate, was amazing. I mean, this is not quite an engulfing bar, but it's pretty telling that the 4 hours after the downside. I tried to get in here, and we got stopped out of that one, but I kept that one long, and I entered another one here. Yeah, now that one's in profit. The first one's in profit, and the second one's also in profit. But I'm not taking profit because I want to see this back at these highs. So I'm quite happy to hold on to this. So if you guys can get in, then I would strongly suggest that you do so. But don't try. Wait for the price. It's going to be really important. Trump is out later, and that may just create enough volatility to push the market down just a little bit. Downside.
Yeah, I think that's a really interesting speech that he's going to make today, because it's to do with the economic people. Yeah, he's talking to them.
I believe so. Yeah, I believe so. It's I
mean, you can imagine what he's going to say straight away. He's going to say we need interest rates lower, and then he's going to say we need interest rates lower. Yes, he's just going to keep saying that.
Yes, I wonder whether he's going to mention anything to do with China. I think that's going to be the thing that people are waiting on. I think
well, you know what he'll say there. Everything's looking great. Everything's looking fantastic.
Yeah. Yeah, you're probably right. I mean, this is the pattern on the for a daily pivot test on the cash chart. So you're probably looking at 73.26. For a test, as I say, it's bit difficult because this market just, it just feels like it just wants to pop up. So it may well be a missed opportunity. And I hope with what everybody's learned that they would have tried to this area anyway, and continue to watch it. So effectively got in at a similar price that I would have got, but I don't know whether that's the case. I don't know whether people just wait for the morning show to start, and if that's the case and you just wait for opportunities, then it's fine to do that, but you're going to diminish your chances because the market doesn't always give us an opportunity at 8 in the morning. This was at 1 o'clock in the afternoon UK time. In fact, 12 o'clock in the afternoon, 1 o'clock in the afternoon UK time. That's when that one started to move to the upside. That was the trade with that one. So if you're going to trade the FTSE in a similar way that I would trade it, then you've got to watch it all day. And when you, with something like this, we got, you guys would have got stopped out. The stop was under this bar. I held on to mine, but if you get stopped out down here, then you just go again. Because the thing is, if the bias is long, which my bias was long, and we'll talk about that in a moment, but my bias was long, so it's just looking for a place to get in, and this didn't happen. Now this did happen. Why here? And when we come to the clean chart, then I can show you this on an easier pattern. This is why here. Strong support level here, 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 here. Now it could have come down a little bit further, and I was aware that that there could have been a little bit more of a dip. But what I saw here was just a bit of a turnaround on the short-term timeframes, and the short-term timeframes then dictated that I had to get my trade on. And if it came down again, then I would have entered again. It's one of those that. In fact, this is the other thing that I really liked about this.
And we're not talking martingale here either, are we? This is not that theory at all.
No, it's not, because with martingale you double up, and I absolutely do not double up. I don't. It's not that I don't necessarily see the benefit of that. I'm sure it probably works. If you understand the maths, it probably works. But that's not my game. I just don't. I don't tend to do that. I'm much more interested in buying and hedging rather than stopping out. I prefer to take a hedge, which I did. When the market started to break down, I hedged and I got a little bit out of it on the way down, and I bought again. So that's the way I play it, and it's not by any stretch an easy thing to do. And I honestly believe you can only do it if you know the market that you're trading very, very well.
I agree. Absolutely.
It's really back to what you always say about you're either trading a one market or you're trading one strategy. And I think with this, because I'm only trading this one market, then I will continue to kind of do that kind of thing with it. But no, I think the martingale strategy, as I say, mate, it probably has some legs, but I'd find that too stressful.
Yeah, not interested, mate. Not for me. Absolutely too stressful. If I was 20 and had never lost any money, I'd probably be into that. But I'm not, and I have.
Yeah.
So
yeah,
not for me.
No, I totally agree.
And I'm not here to knock anybody's strategy. It doesn't matter how. It just matters if.
Yes. Yes, it absolutely does. Now with this, so why long? That's the other question that I think should be addressed. Why would I still be going long here? And why is this an all right place to go long? And what I look at is the structure, because if this is the lowest low and this becomes a higher high, this lowest low is still in play. So it can, we want a higher low for sure, and this might become the higher low which continues the trend. But while this particular price is in the market, as long as it holds, the trend hasn't changed. So I'm literally just trading with the trend. I'm not trying to second guess it. I'm just saying if it breaks down here, then I'm going to go here. Now that can be very dangerous if you do that here, because if this market is going up, then my idea would be try and buy as price comes back. Here's the high that it broke from, so I'd want to buy there. Now, if it comes down, I'm still a buyer at this point, and I would be a buyer at this point. In actual fact, I think I probably was. Was I? I can't remember. That might have been that was the really good run to the downside. But I might have been a buyer at this point. But, you know, with this thing, as long as you have stops or whether you hedge, whichever your particular answer is absolutely fine. But as long as you have those things in place, then that's not a problem. It's probably better to put the stops in place. And I would suggest to everybody that right now, putting your stops in place rather than trying to hedge your market is a better way to do it as you kind of get used to a market, and then when you get used to it, then you can start to think about hedging and things like that. But in the first instance, then I think the right thing to do is put a stop in. But if you're trying to buy this area here, which is a great area, you know, this you'd be trying to get in right here, you probably would have seen this bounce as well and be thinking, okay, we're good to go long. But then the market starts to break down. No big deal. You're going to look for the next. Now, when it comes down, then you are looking at short. So, and you can see that when this area got retested, it was a really big short. You know, it came up to that level. First time it touched the level, it was gone, even though there was a little kind of movement to the upside. Now, this really is all part, in my opinion, anyway. This is what I look at with the sentiment cycle. If we were to bring up the sentiment cycle, then and if anybody wants me to bring that back up again, I'm quite happy to talk about it again. Then this would be an aspect of the sentiment cycle which would be fairly I don't know if I can use the word predictable. Can I use the word predictable?
Well, yeah, of course, because that is exactly what it's there for. You know, it's telling us here's what's going to happen next.
Yes, yeah, it's a little roadmap, isn't it?
Yeah, absolutely.
So the roadmap would suggest that this is going to happen, and then we start to grind back to the upside. But the phase that we seem to be in right now, and you've got the sentiment cycle right in front of you, haven't you, Jeff? You always do, right?
Except when I went to Bali, my wife cleaned my desk, and there's a pile of papers that I haven't gone through yet, in which I'm sure the sentiment cycle resides, but it's not in front of me at the moment. No.
Well, this is something that everybody, you know, as I say, should be aware of. And if you want me to go through the sentiment cycle, then I will talk about it in a bit more detail. But the area that I think we are kind of getting in, I don't think we're in the overconfidence phase. I think we're a little bit before that. And I'd like to see this market up. I tell you what I'm looking for.
You don't think that's the wall of worry?
Well, let's have a look at it. Shall I bring the chart? Shall I bring the sentiment cycle up next to it?
Go on.
We'll talk about that, because I quite like this thing. But this is the thing, isn't it? And this is what I like and dislike about the sentiment cycle in many respects. Is that it is to a degree, it's subjective. You know, it's it doesn't have objectivity like many other things in trading. But then I suppose, like many other things in trading, it's subjective, because a lot of things in trading are subjective. So this is actually, I don't like this one. I'm going to bring up a different one. Let me bring up a different sentiment cycle, because I don't like that particularly. Right. I don't know which one you've got there, mate, but I quite like this one. I quite like this one. Now, let me just bring this down here. There we go. Actually, can I blow that up?
Yeah, that's the one I look at.
Yeah, this one you look at. Brilliant. Okay. All right. So, I don't know how well you guys can see that, but what you were talking about, Jeff, was the which bit?
The wall of worry.
The wall of worry. This one.
Right
oh,
there.
Wall of worry. Yes, here. Which, do you know the reason I'm I'm not so sure. Let me just bring the daily chart back. I am looking at this as the aversion, as the aversion trade, as the aversion move. So if I bring this down, then I've got the panic, the subtle warnings, and the panic, down, 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 discouragement as we sort of like we get into this phase here, and then we start to climb. This for me is the wall of worry, and then I get anxiety, then the aversion, and then a little bit of denial here, and then I think we're off, and we're starting to kind of like, you know, we're way off from the return into confidence. I think we've got plenty of room to the upside to go. But that's the way I'm seeing it. I think this is the anxiety. Okay. So I think we've been through the wall of worry personally. And what's interesting about the sentiment cycle is that you can have a few of them really within one move, can't you? But I think on the kind of big picture that I'm looking at here, then for me we are kind of in the in this phase here. We're sort of like starting to kind of go up again. I think this is denial,
ready to break the highs.
And I think we could really start to motor. And then just couple that with this, and I think these are quite nice bedfellows. When I bring in,
I think if I saw a higher low there now, I'd be very, very happy to go long for sure.
Yes, which is you know, absolutely fine, isn't it? And if that's what people need to wait for, then I
mean, you've probably got it there right now in that big bar.
This one here. Yes, it might well be. This is the thing. This is what I'm looking at to see whether we can actually start to break further to the upside. Now let me bring this in here. Now this is the other thing that I like to look at when I kind of think about the sentiment cycle, because if we are starting to focus more and more on you know, the times of year that the markets move, then the seasonality is kind of till December, and I wonder whether we might actually get a really good run in November to the upside, for the rest of November to the upside, and get almost to the overconfidence phase, or maybe the overconfidence phase just continues right into December. I don't know, but I am looking for further upside, and I'm looking for further upside really up to this point here. That's where I'd like to see the market. Now, if that was the case, if the market did manage to get up to that point, which is obviously a long way off, and you know, I'm looking quite a way out into the future, but if it ends up being into this area, actually I can't do it with a triangle with that. Let's do it here. Let's do it with a line. So I'm looking for around about another 300 pips or so, and you know, let's see if I've got the wherewithal and gumption to hold on to what I've got until that point. Probably not, but let's see.
Too many things happen in the meantime, don't they?
Yeah, like Donald Trump.
Yeah, like a few hours away. Yes.
Yeah.
Well, quite a few hours away, to be fair.
So now, if we bring this onto a monthly chart, that's going to bring us near these highs up here. Now it might be that if it can take a little bit longer to get there, it's almost better in some respects, but it would still leave this pattern kind of intact as well. You know, if it gets back to this kind of high, in actual fact, that might be a better place to go. So maybe we're looking for about 200 pips to the upside, but that's what I'm at. That's my target, mate, up there. I'd look at the trend line as well just to see where we're at, but I think this area where we kind of did start to move to the downside could cause some issues for the market. So I'm looking for another run to the upside. And if I'm wrong, I'm wrong. You know, it's obviously I won't be so blasé about it if it does start to come down, because it means I've got work to do, and it means much more management on my front.
Yes.
But this is, you know, but I'm willing to hold on. I mean, I've got probably far too many trades long, in complete truth, but I was okay to hold them because of the way that I hedged. You know, it wasn't such a problem because of the hedging that I do. So even though these are currently in the red, there was hedging that went on all the way down here that kind of balanced them out somewhat, not massively, but somewhat. And I have to say, from where we are, where price is right now, I'm absolutely in complete balance. So anything that starts to take off is going to start making some decent money. So that is where we are with that, mate. That's the FTSE.
Cool, mate. We've got a. Sorry, you go.
No. If there was a trade that you were going to talk about, let's do that.
No, I've got 12 minutes before I'm likely to place a trade. As you know, I don't trade the first candle of London, so I'm good.
Okay. I was just going to bring in gold and just have a look at some barometers. So gold moving to the downside is going to help the market out. It doesn't seem to be a great deal of fear in the market, so that's going to help buoy the stock market. And let's just check some of the currencies as well. I'm interested in the Euro Aussie for a long, and it was a great day yesterday for a Euro Aussie long. Let's just bring in the actual day. Now it has.
What chart are you looking
at? Euro Aussie long. Did you not? This was it here. This was yesterday. So we were discussing this in the open when we were talking about it. We had this bar. So this is where price was, and we had a pretty decent run to the upside, around about 50 pips. Now it is a bit trapped. When I looked at it, I saw this. There was a little trend line down here that was trapping things, but it's gone through overnight and now it's retested that level. So I like this one, mate. I think this is looking really good. Looks like we just had a close to test of the weekly pivot. Daily pivot is starting to hold up as well to show some level of support. And if we get a bar like this by the close of the 4-hour period, I think this is really good to go long, and I think we could be looking at monthly pivot before this one starts to come back at us as well. So Euro Aussie is my pick of the week.
Oh, like that.
Yeah, and
actually,
go on, mate.
It's actually a slingshot setup.
Oh, there you go.
But it's already rejected the DR2 level. So yeah, it's tough for me to go long at that level, but it wouldn't be so tough to go long at the current level. So I kind of get that.
Yeah. So let's have a look. Oh, I mean, look at that, mate. Look at it's a cracker. Hourly chart.
And I'm looking at 4-hourly chart.
Okay, well, we'll have a quick look at your hourly chart, because we've had a lovely rejection off the daily pivot. Now the buying's starting to come into play. We'll go down to a 15 to see if there's any lovely entries here. Oh, this is just looking great. It's looking really, really good. I don't even know whether this is going to come back and test, but if it does, then I would suggest that this is the trade of the day, and maybe much longer term. So Euro Aussie, as I say, is the pick of the week for me. Maybe we start to get a retracement down from this point. So if you're not in, you might be a little bit late, but I'd be fairly comfortable saying, just put your stop in place. You're going to have to live through some fluctuations potentially, but if this one starts to take off, then you're already going to be at 1-to-1 by the time we get to the highs, and slightly better. So yeah, Euro Aussie is the pick for me, and obviously FTSE for a long is also the pick, but you probably got to wait for a half decent pullback with a FTSE intraday, just to kind of get into this market, because it's at this stage it's just looking like it may well continue to the upside, and there might be a missed opportunity, but you're just gonna have to accept that, unfortunately, if you're not in this already. There's usually a chance. The fact that we've got let's have a look at the hourly. Yeah, this hourly would suggest as well that there would probably be a retest at this stage, and what I'm looking at with the hourly is the RSI was fairly flat for some periods, and now it's just broken above the 50% line. But it does suggest at this particular point that we probably get something of a test of momentum. So bringing the RSI back down here, and then that would start looking like a pretty good spot to then try and get the long on. So just look for a bit of a retracement. I don't think you're going to get daily pivot personally, but if you can get somewhere along the trend line, if it comes into the trend line, then I think you've probably got a trade. So there's lots out there, mate. There's lots of really cool possibilities today, I think.
Mate, I agree. And I'm basing a lot of this around Donald Trump, to be fair. I think he's going to drive the dollar down with what he says today.
Oh, interesting. Okay. Yeah. All right.
I've got that fixed in my head, and it just won't, I can't shake it. So I'll show you how I'm going to deal with that.
Yes, do that. And while you're doing that, I'll have a little snifty around for you. And if there's any seasonality or COT you want me to bring into that, then let me know.
That'd be great. In particular, I want to know about the yen. I know we've discussed this, and I've got a differing opinion to what I think it was seasonality. It may have been the cot. I can't remember. Is thinking. I think the yen is on an upward spiral, and I'm keen to trade anything against it to the downside. That said, I'm in a long euro yen, and you should be able to see that chart. Yes, you can. No, you can't. You've got the euro chart. There's the euro yen chart, right?
Yeah, we got the euro yen. Yeah,
I got into euro yen this morning, and we've taken first profit. Of course, we take first profit before the weekly pivot, so that's all good. And this is just a classic back inside the range, away we go trade off a false break of both the trade line that we've got here and, of course, the bottom of the range. So it's a clear trade for me. What isn't so clear is where the euro is actually headed. And go to your point on Euro Aussie, I think down is the way to go. And ultimately, I was looking for maybe here as my out point, certainly take profit 2 point, and that's where my take profit 2 is on euro yen, and definitely out here looking for shorts at that point because I've got a bullish outlook on the yen. Timing, of course, is everything. I don't know if Trumpy's going to kind of just flick that switch or not, but I think he will flick the switch for the dollar, and I think the dollar will be under pressure after his speech. So that's kind of tricky with managing this trade, which is euro dollar, that we've been in since last Wednesday or Thursday. I can't remember what, where we've taken 2 lots of profit here. We've got to give this a chance to break the lows here. Of course, there's no.
Oh, that's a cracker, that one, mate.
There's no question that we've got to give this a chance. And if it does go, my ultimate target is down here, as I've said all along, around about 109.40, 109.50, something like that. So there's still another 70 or 80 pips left in this if we're lucky. Well, not so much lucky if we've got this right, I suppose. But I totally see even a little bit more in this if you want to hold on for maybe another 50 odd pips after that and take this low on. I don't know that we can go through that low, but it's an obvious target. So you've got to give this a chance to do that. So I'm keeping my stops above both of these pivots. I think that's the safest place they can be. There is there's no risk. This is a winning trade only. It's a matter of whether it's a small winner or a big winner. And if it's a big winner, then we'll be looking for price down here around about 109. So I'm more than happy to hold on to that. That makes me very, very, I'm not going to say nervous, but it makes me a little bit confused in what I'm going to say next, and that was the euro yen trade. Given that I'm bullish the yen and bearish the euro, how on earth am I in a euro yen long trade is quite beyond me. But
well, that was your setup, was it?
Well, that's right. The setup was there, and I can't not take it.
Yeah.
It just sits there, and I think, well, how can I not take that trade? I have to take that trade. It's broken the bottom of the range. It's broken the ascending trend line or the support trend line, and then it's rebroken it, retested it. I can't not take the trade. Of course, as long as you take profit before a resistance level, that's well and good. But when I look at this chart, there's a definite second take profit here, and there's a definite exit point. So I've got to hang on to that one as well. What I probably need to do is make this one safe, so that both trades are winners, no matter what happens. And that's probably what I'll seek to do.
Yes.
And the way I'll do that, I believe, is just take more profit now and make myself in a position that I can't lose on this.
Is there any equation that hedges one against the other, and then allows you to let it breathe, and possibly they both get to turn around?
I can't work that hard, Ash.
I mean, to be honest, I don't know if that is even a way to play it, because obviously you're trading euro, yes, but you're trading it against two separate currencies, and I'm not sure. Well, as you know, just like you, I don't think I could do the maths on coming in completely bare on two currencies like that. FTSE, I've done it for so long that I kind of get what I need to do when it comes down to the hedge. But when it comes down to this, and I still haven't, mathematically worked out how to use gold to hedge against the FTSE. I've thought about that as a possibility, but I haven't really gone there yet. And this is the thing about trading, isn't it? There's so many different ways that you can manage your risk. Whether it is that you just trade one market, put your stop loss in, and that's almost kind of like risk management 101. But when it comes down to doing it in different ways, there's, you mentioned the martingale method. It is a way to kind of manage risk. There is also hedging. So you've got, maybe you go long on the stock market, but at the same time, try and get along in gold, just in case that there is a problem with the stock market, or even bonds. And maybe this is another example. You kind of take a long on the euro against one currency, but then you stretch it short against another currency, and that maybe provides a hedge. But I don't know, because you can't go one for one, can you? Because
no, definitely not.
The markets will move differently.
Yeah, look, crazy, very, very differently, and you'll finish up in a mathematical bind if you try and do that.
Yeah,
and you'll be, oh shit, now which one do I want to go?
Yes.
So like I said before, I don't want to work that hard.
No, do you know, it's interesting. Sorry, mate, you go.
To be absolutely fair, if I had and if I was absolutely full-time trading, which I'm not at the moment because I've got this bamboo thing going on, but when I go back to full-time trading, I'll probably look at scenarios like that, but I just can't afford to spend that much time in front of the charts at the moment. So I think, you're finding that I'm trading 4-hour and daily charts far more at the moment than I am intraday charts, because I can't spend the time in front to actually manage these positions. But I think this one, I just need to make myself safe here.
I've got a question for you.
Go.
You have been trading 4-hour and daily charts for a little while now. How does it compare in a profit line with trading intraday? Because from what I gather, swing traders tend to do better than intraday traders.
Yeah, and the reason for that is, from my perspective, is that I'm taking profit at far better prices than I am on the intraday charts.
Yeah.
So, for instance, if I've got I think I had a 35 pip risk on this trade. My first take profit's not till 20 pips. So that's 40 something percent of my risk. Whereas on an intraday trade on a 30-minute chart, I'd be taking profit at maybe 1/4, even something like that, of my risk. So I'm getting a far better reward when I'm getting safer in the market, or at the same stage, I'm getting safe in the market. I'm getting a better return on that first take profit.
Yeah,
I think that the risk factor is less, if you like, on a bigger time frame, because really what I'm doing is I'm trading to a resistance level and taking profit.
Yeah.
To me, that's fairly obvious. On an intraday chart, I don't have that luxury, because that's my second target, is the resistance level, or the support level, as the case may be. My first target is to get safe.
Yeah.
And I'm not necessarily trading what a slingshot theory is on the longer time frames. I'm trading levels here more than I'm trading, here's a bit of liquidity. If we can take advantage of that, then let's do so. And it doesn't matter if we go beyond TP1, because we've taken half our risk off the table straight away. So we've got a winning trade no matter what.
Yeah.
At that level, as long as we pick up the liquidity, that's all that counts. The win is the real bonus,
Yeah.
But here I'm actually trying to win rather than get safe, if you understand the difference.
Yes. Yeah.
I mean, I know that sounds crazy to some people, but it's long-term survival for me on the intraday charts. On the bigger time frames, it's definitely looking for a big return on my investment, basically.
Yeah.
That's the difference.
Yeah, yeah, I get it, mate. And does that mean that when you do have more time, actually, you'll still choose to do the dailies and the 4 hours?
I'll always do that,
Yeah.
and probably move to weeklies. You know.
Oh, okay. Yeah.
And I think that's something that excites me, because that means I can concentrate then on my little 30-minute trades and not even worry about the rest of it. It becomes more of an investment rather than a trade, you know.
Yes. Yeah.
That's the way I look at that.
Yeah.
But intraday, I think I'll always trade intraday because I like it. I like the movement of the markets and trying to work out why the hell that did that. And
I completely with you, mate. And do you know what? The thing that I enjoy most about intraday is watching the bars develop. Not when they're finished. I love watching them develop. That's my kind of thing.
You like the story of the candle, don't you? Yeah.
I do. Yeah, I really do. I think it's fascinating, and because I've been thinking about investing in order flow and level 2, and then I look at my chart and I think, yeah, but I can kind of see where the order flow is just by looking at the bar.
Yep.
So I don't know whether it will help me, and at least it's real. With order flow, they can put their orders in the market and then all of a sudden delete them right at the last minute, and then you're in big trouble. So yeah, that's one of the things about watching the bars. That's what I really like about it. I like kind of reading them as they form, and seeing where those orders are kicking in.
It's a bit exciting, isn't it? At the end of the day,
I think so, mate, and maybe that's why we like it. Maybe it kind of. And I think the key. I think you've hit the nail on the head actually with the key with it, because the key for me is trying to get the intraday trades, but manage them like a swing trader. So you do actually get the kind of like proper returns out of it. So you're still trying to get in where a swing trader would get in, but that's what I'm doing anyway. But then I'm trying to actually get a real pinpoint accurate entry on an intraday chart. And yes, you can get run over, and I get run over quite a lot, but when it goes well, it goes very, very well.
That's the key, mate. Keeping the winners bigger than the losers.
Yeah,
we've always had that opinion, and if you haven't got that opinion, then something's wrong.
Exactly. And do you know what? And I want people to understand this, because I think after Bali, and just before Bali, I had a bit of a purple patch. And I want people to recognize that it was a purple patch. It's not like that's not my regular kind of day-to-day success rate. I don't win every trade like that. So following me without questioning what's going on is not the way forward.
And every single trader, you can't do that. You can't just blindly go, okay, this is going to be winning trade, because it may not be. And even if you take those particular in terms of entry, stop loss, and profit levels, every single trade is going to change that based on certain circumstances.
Yes.
And that's the trick, I suppose, of things like trade calls. And I don't want to dismiss trade calls in any way, shape, or form. I subscribe to 1, 2, 3 lots of trade calls. Why wouldn't I? Because they're professional traders and they're making money. But that doesn't mean I get the same results they do.
Yes.
Because they are managing a trade when I'm asleep, or vice versa,
exactly.
et cetera.
Yeah.
Or I might see a setup, and I think Justin put one out yesterday or today, I can't remember what, and I wouldn't take that in 100 years because it doesn't suit my rules.
Yeah.
But it'll probably win 3 or 4%, and I'll go, you're a bloody idiot. Why didn't you take the trade?
Yeah. Well, there's got to be a point where we take responsibility for what we do, and that's we need to be able to do this alone, because if it's a lifetime skill.
Yes, it is, and it's something you only acquire through lots of time in front of charts.
Yeah,
you can absolutely make money simply by following a trader, but you've got to trade every single trade that he calls and cop the bad with the good. It's as simple as that.
Yeah, totally agree. Now the FTSE 100 is about 2 minutes away from a potential entry, mate. So I'll let you continue, and then we'll talk about that in a second.
All right. Okay. Well, I'm kind of excited because I think, as I said before, Donald is going to drive this dollar down tonight. I can't put an exact time on that because I can't remember it. But what I'm seeing at the moment is very, very interesting because we're seeing the dollar strengthen as I see it. Euro's going south, Aussie's going south, pound's going south, Kiwi. How'd the Kiwi go? Actually, that was yeah, that didn't have such a good day so far, the Kiwi. So everything's going down against the dollar. I'm expecting this is going to change when Trump talks. The trick is, for me, getting into a position so that I can take advantage of that, because I've really got that fixed in my head. And just going on what I've just said doesn't mean that you guys should trade everything against the US dollar because it's going to dive. That is my opinion, and I'll trade it to suit if I can. I won't just put an order in the market that says, okay, I'm going to trade this against the US dollar because I think Trump's going to say this. That's folly. What I'm going to do is look for a setup that goes along with my thought process.
Sorry, now, buddy, do you mind if I grab the screen quickly?
Go hard, mate. Yeah,
where's the... where are you? Where have you gone? Actually, no, cancel that. Just cancel that. This is the thing about watching the bar. The bar changed right at the last minute, and I wouldn't be trading it. So you guys feel free to move to the upside if you want, but that isn't a safe bar to enter on. So sorry.
All right, happy days. So let me go with euro dollar to start with. I think euro dollar is going to rally, right? Now, I know I'm short and I've got my stops in the right place. I'm going to continue with that thought process. I'm not going to change anything here because I'm free trading this. I can't lose on this trade. So if my thought process on Donald Trump is wrong, and this goes 100 pips or 200 pips short, as I've said it would under no Trump circumstances, if there's such a thing anymore, then, and I've closed this because I think Trump's going to say something, I'm an idiot, right? I've got to maintain exactly what my structure has told me is going to happen. My structure tells me that the euro is going to 108.90 or 109 or whatever the case may be. So I've got to maintain that position. The really cool part is I can't lose on this trade. So if I'm right in Trump and euro goes to 113 in an instant, then the worst thing that can happen here is I've made money, just not as much as I would have hoped. The other side of the coin is if I can find a reason to go long something against the dollar, then I will do just that. This may well be one of those. I can already see a potential entry here for the Aussie dollar long. And I spoke about this before. I think it was yesterday I was speaking about this, that I was an absolute Aussie bear, but this is not the place to go short the Aussie for mine. The place to go short the Aussie is when we get to here. So I absolutely see the potential for this to go to the top of this descending channel. We've got a great candle here, bull bar off the monthly pivot. This is a really strong opportunity to trade this long for mine. It's just a matter of finding where and how I'm going to get into this trade. So at the moment, do I see it? No. Well, yes, I do. It's exactly what I just said. It's the break and retest of the daily pivot. So there's an entry long above this bar. And I dare say I will place that order. Where I'm going to put my stop is the big question. Let me say this market can go to where I said it can go, which is 31 pips only. It ain't a big deal. Therefore, I can probably take a 30 pip risk into this and look for 1-to-1. But therefore I'm not taking any profit at all until I hit that level. To me, that's a little bit on the low percentage side of things. So what I'm going to do is probably go a little bit more cautious and wait for another opportunity down here somewhere off a 30-minute time frame, and try and reduce my risk in terms of pips risked versus reward or potential reward gain. I'm not sure how I'm going to do that right now because I don't have the right parameters, but that's what I'm looking for. I see the entry up here. I see the stop down here. Too risky to take entry here, stop here at this point because we've already gone beyond that. But I am looking for another opportunity. It's probably going to come off something like this.
Just really quickly, heads up, guys, probably about 1 minute potentially away from a trade in the FTSE 100. Set your trades up, set set it up to be around about a 15 pips stop. We'll come back to it in a minute.
All right. I won't go any further. The pound's going to be the same. Pound's already bounced off the bottom here. We've now got a weekly pivot, daily pivot retest. So I'm going to drill down into the 30-minute chart and see if I can find a way in for this. There's a trade line I've got here already, very obvious. So what I'll be looking for here is price to get below here, back above, retest, and trade it long. Anything that gives me an opportunity to trade long against the dollar coming into the next few hours, I'm going to take with both hands. Right, Ash, what do you got?
Okay, so let's have a look here. So we got, I'm going to share this with you. We have got a test of the level. So that was the first thing. We've had a test of the level. Now, it's not the best bar, but it does just about qualify. So this here is kind of a low test, if you like. It is a hammer. It would just about fit the parameters. The body is around about 3 pips. The tail is around about 6, so it's double the size. Basically, going to put a buy stop at the high, 2 pips above, with a stop at the low. If you want to be hyper conservative, which actually I would suggest doing, I'd put your stop under the daily pivot. That gives you plenty of room. And then if things start to crash down, you can manage it a lot easier. So there is a buy stop at the high. Now let me bring you the actual numbers for you guys. Where is it? I'm always having to switch between the FTSE and the UK 100. FTSE future, sorry, in the UK 100. Let me just see what I've got. See if I can find it. Oh, you know what? I can't find it. Where are you? Ah, here we go. Right. Now, obviously, if price comes down, no big deal. So your entry will be, the high is at 73.43.80. So I'd go at 73.46. 73.46 with a stop down probably. Let's have a 25 pip stop. So you're looking at 73.22 for your stop. Now that would bring you up to 1-to-1 at weekly pivot. If the weekly pivot gets tested, I would take half the trade there, because if this does go where I think it's going to go, which is potentially 200 pips up, there's going to be add points all the way, so you can make the trade safe at that point. So it's around about a 1-to-1. So entries at 73.46, and the with a stop down around about 25 pips, and the first take profit is going to be the weekly pivot at 73.73. And that looks good, mate. That looks really good for some upside. The bar isn't the best, but it's just shaping up beautifully with that.
Ash is keen on along here. I can certainly hear that in your voice, mate. There's no doubt about that.
Yeah, I really am, and I think it could be a very, very good long as well. So.
Well, we've both got this bullish outlook. You on the FTSE, me on anything against the US dollar. But you know, this is really a speculation for me, because I'm going on something that is not concrete in any way, shape, or form. Yeah. I'm going on something I think is going to happen. But I'm willing to trade that if there's a setup. If there's not, then I'll just watch it happen. And that's me, mate. I think.
Sounds good. Sounds good. Yeah, me too. Me too. I don't think there's anything else. You may well be triggered into the FTSE now. I don't know, but let's have a look. Yeah, anybody that's put that order in, you'll be triggered in. So now see if you can ride it right up to the weekly pivot and just manage those stops. Price breaks down through this area here. Maybe just consider taking the trade off the table, but only consider it. I think this is a pretty good market. So I think the long is well and truly on here.
Giddy up.
Yeah, see where we get going. So that's me, mate. That's me. That's you. That's us.
Yeah, I'm sorted, mate. We're done. We will. Actually, I've got another show later tonight, but for us, we'll be back tomorrow. Yeah.
Great stuff. Yeah, same trade time, same trade channel at 5 to 8.
5 to 8. There's a date. Don't you be late, guys.
All right. See you then, chaps. Hopefully this trade goes well. See you in the morning.
Happy days, everyone. Bye for now.